Hey traders, welcome back to the Stock Planner channel. We're your go-to source for swing trading strategies and questions and answers. Today we're driving into PepsiCo, ticker symbol PEP, to explore the smart swing trading play that you could add some fizz to your portfolio. Let's get started. Add some fizz. I added that for color. We're looking at the weekly chart, PepsiCo. And the reason why I'm using a weekly chart is it takes that lot of noise out of the singles. And this is a zigzag indicator. And it predicts those tops and bottoms perfectly, except right now it doesn't know what it's doing in the last 3 weeks. It doesn't know what PepsiCo is going to bounce off its support or not. And I think it's going to. Dwelling down, using the trading view to the day, it looked like it was going to bounce and then came back down. Anyway, I think there's a play here to go up long on PepsiCo. And I want to tell you, PepsiCo is one of my top 30 stocks. I have Coca-Cola on there as well, and maybe I'll remove one of them in the near future. But right now, I traded both Coca-Cola. I have a trade in Coca-Cola, and I'm not thinking I want to put a trade in PepsiCo. So this video is going to look at the fundamentals, the technicals, and then we're going to present an option play that might have some possibilities. Stick with me. I think you're going to like what I have. And remember, you must learn swing trading on your own and do your own due diligence. This is not trade recommendations. I would never take any kind of advice from anybody on the internet. I would learn from them, but never copy, trade, or follow. It just doesn't make any good sense. Well, let's get started. Here's a short video on the fundamentals of PepsiCo.
Why PepsiCo? Why PepsiCo? Well, it's a powerhouse in both snacks and beverages, operating globally with 7 diverse segments. PepsiCo boasts a diverse portfolio of globally recognized brands across beverages and snacks. In beverages, it offers iconic carbonated drinks like Pepsi and Mountain Dew, non-carbonated options such as Gatorade, Tropicana, and Bubbly, as well as ready-to-drink Starbucks coffee and Rockstar Energy. Its snack lineup includes household names like Lay's, Doritos, Cheetos, and Quaker Oats, alongside dips, spreads, and convenient foods like Rice-A-Roni. PepsiCo also ventures into health-focused options with Smart Food popcorn and Naked Juice, and even alcoholic beverages like Hard Mountain Dew. This extensive range of products positions PepsiCo as a leader in catering to various consumer tastes and preferences globally, 44.4% below our estimate of its fair value, making it an appealing candidate for a mean reversion trade. And check this out. Earnings are forecasted to grow 9.13% per year, with 13% growth recorded just last year. These fundamentals are solid, and the stock is ripe for a potential rebound. Now let's talk about the strategy. We're taking a long position using a sell-bull put strategy. This allows us to potentially buy PepsiCo at a discount while earning premium income if the trade doesn't execute. Here's the breakdown. Target price, $163. Stop loss, $153.88, to cap potential losses. Expected move, about 3.3% over 74 days. We're risking $100 to potentially make $112, maintaining a 1 to 1.1 risk-reward ratio. With a margin requirement of only $500, it's a low-capital strategy that still packs a punch. Technicals are also on our side. Here's what we're seeing. RSI indicates PEP is rebounding from oversold conditions. MACD shows a bullish crossover, signaling momentum is shifting upward. Support at $153.88 gives us a tight stop-loss zone to manage risk.
Again, looking at PepsiCo on the weekly chart, using a trading view chart. It's a free package out there, and does a lot of things. It allows you to create a forever watch list, and I have several watch lists, and it allows you to scan for only these stocks on your watch list. That's how I found this stock. The RSI was below the 30, which is an indication of a bullish trend, and it did go up a little bit, but now it's back. The RSI is back below, and I believe it'll swing back again, but it hasn't done that. A lot of traders wait. I think it's going to bounce off of support and go north. Back a few months, it did the same thing. The RSI went below the 30, and it was a little early. and we had a RSI below the 30, and it came back around. That's when the traders do it, and that's a nice trend up. Switching to the daily time frame. Daily time frame, we had that RSI below the 30 come back around, and that's nice little upward movement, but then it drifted right back to the support line. The MACD did cross over, and that's a bullish sign, and it still crossed over. Back a few months ago, we had that RSI below the 30, a crossover of the MACD, and a run up. These bigger, more mature stocks tend to follow the MACD and the RSI a little bit better, but it's not guaranteed. Now the RSI on the daily time frame is below the 30. Well, whether it swings back around or keeps going down, that's what trading is all about. I think it's going up. TradingView has this as a neutral, and the target is about 15 or 16% above where it is today, and that's a year's target. Over 18 analysts cover this stock, and their average is $182.11, which is right where it's at. Again, this is for the year. I apologize. Where it's at is 157. They want to go to 182. I said that wrong. That's the price target, 182. The current is 157. So if we think it's going up, is there an option play for around $500 in the next 2 months that we can capitalize on that theory, or guess, or wish? Now this is a tool. It's a planning tool. It's called Option Strat, and you can build all kinds of option strategies. We're looking for a bullish strategy, and the two I like to use bull put spreads and short puts. But short puts require a little more capital, and today I would like to spend about $500 in margin. So we're going to do a bull put spread, and we're going to move our short put down to 150, and our protection put about $5 difference, which gives us our $500 margin. 150 is down here, and that gives us a lot of room to come down yet. As long as the stock stays above 150, we're going to be happy. Right in that area, 150 and 145, and that gives us a credit in our pocket, $154. Now we're going out to February, which is about 75 days out. It gives us enough time after the election, and things are settled down a bit. And our break even on this one, because of our premium that we received, is $148.50, somewhere in that area there. 8% move, our stop loss is calculated to be 147.73. So let's find 147 somewhere in this area here. Let's go right 147, but it's a little higher. And this is your playing field, and this is what you're going to lose, 148. And our profit target is 171, somewhere around in here. So if we we expect to get about 145, and we expect to lose about 143. And this is kind of just a guesstimate. And this is really your playing field. You can take profits at any time or stop yourself out. And you can monitor it very easily by just setting price targets, price alerts. Very neat. But if this thing keeps dropping, your max loss could be $146. Well, let's go back to the chart and do a summary. So let's take a look at this trade a little closer. Selecting the long, our break even is 148.48. You can set these precisely if you want, but I don't do it. I'm using my broker to monitor profit and loss, and this is just a visual. And we're going to close this out February 21st. So based on our trade, we need to have, based on our premium that we received, we need this stock to stay above 148. And if it does, we're expecting to make about $147. But if it gets down below that, we could lose up to $443. The market expecting to go up to 171. 171 is right about there. And our stop loss is at 147. So once it gets down in this area here and retracing, it's going in the direction we don't want it to go, and we're going to get out. The margin required for this investment is $500, and we're selling a bull put spread, not a put. So what do you think? Initially, when I did this trade, I was thinking of selling a put, but then I realized that I didn't want to invest $2,000 of margin. So I switched it to use less margin, but gave up some premium. All right, what do you think? Going up, going down, go down a little bit more? Please leave a comment below. I'd like you to subscribe, and I'd like you to like this video. I'm hoping you're going to have a good trading week. We'll catch you on the flip. Happy trading.